Hi, this is Eric here, and in this video tutorial we're going to be going through how to calculate your GST for your GST return. And the first thing is that there's three different types of GST return. There's payments basis, hybrid basis, and invoice basis. Now, 99% of people use payments basis that use the cash book that I can see anyway. And the reason why is because it's the simplest of the three. And basically it takes your cash book dates to work out which period it belongs into, and it uses the cash book amount, and so that's the simplest. With invoice basis, it calculates the GST from your invoices, both the invoices that you send out and the invoices that you receive. So for both of them it uses the invoice date for determining which period the GST goes into, and then the invoice amount. And for the cash book, it means that you have to put in an extra date, which with payments basis, you don't have to put in. So because the date is the invoice date, not the cash book transaction date. And I'll show you that later. Then hybrid basis is a combination of the two, where it uses your invoices for your income. So it's like invoice basis for your income, but it's basically payments basis for all your expenses. So that's the three different types of invoice, and again, strongly recommend payments basis. So if we go into the cash book, first you need to make sure you've got all your transactions for the GST period that you're printing the GST out for, and all of these must be allocated. And then for invoice basis, for all the income and expenses other than things like bank fees where you don't get a tax invoice, down here you need to put in the date. That's for all of the transactions that have GST on them. So you'd have it on this one, and for sales you'd have it, so that one's already got it. And so for invoice basis, all of them have it. For hybrid basis, only your invoices need to have it, but your invoices that you receive from suppliers don't need it. So that's why we recommend that you stick with payments basis. Okay, let's have a look at the actual GST report. So we'll do it for October and November and hit preview. So there's our GST return, and it's got all the boxes filled out. And I'm just going to show you the detail report. So here we've got the detail report, and you'll see that it's only got the calculations for box 8, 12, and 6. And then what it actually does is it fills in box 8, 12, and 6 and works out all the other boxes from those three boxes. It basically works backwards to work out what the GST, like for example, the total sales would be. Now, one thing that causes some issues with that is that we get rounding, and that causes a bit of confusion for some people, but that's the way the IRD has asked us to do it. So with the rounding, for example, if we start off with a sale of $10 and we calculate the GST, it comes to 130 cents, 130.43 cents, and then that's rounded to 130 cents, and then when we calculate it back again, the sale comes back to 99.97. So that's a difference of a few cents. But that's the way the IRD wants us to calculate the GST. They want us to calculate the GST exactly so that it matches all of these figures exactly, and then the total sales are slightly out. So that's just one thing to remember with the GST return. Well, that's it, and I hope you enjoyed this tutorial, and look forward to seeing you on the next tutorial. See ya, bye.